Hello, this is Alexander Green, Chief Investment Strategist with the Oxford Club. And of course, the thing that's on everyone's minds these days is the Russian invasion of Ukraine. Aside from the humanitarian tragedy, the great death and destruction that's going on over there, it's upended world markets. We've seen record volatility for stocks, for some commodities, and the VIX, the volatility index, has been ringing like a fire alarm. Obviously, people are very upset, and not without cause. Obviously, we had high energy prices coming into the year just because of the pickup in the economy and supply line snags and so on. But that has now been taken to a whole nother level, with oil recently crossing the $130 a barrel mark, which it hadn't touched since the late 1990s. And of course, wheat and corn, which are big exports of Ukraine and Russia, have also shot much higher. So it's an unsettling time for investors. Markets hate uncertainty, and armed conflict is the ultimate uncertainty. So what should investors be doing with their portfolios now? Well, I'll address that question. But before I do, I want to remind you that I have a free e-letter called Liberty Through Wealth, and you're free to sign up. It's a complimentary service. Just click on the link below. Traders and investors might look at this a little bit differently. But let me just say that I see things coming across my desk these days: sell bonds, buy oil and gas, buy defense contractors, buy cybersecurity. Well, I'm not saying those are bad ideas, but we were buying oil back when it was so cheap that nobody wanted it. So we're sitting on big profits right now, so we don't have to rush and chase oil stocks. Cybersecurity, well, I mean, cyber is a threat, a perennial threat. So should you own cybersecurity? Absolutely. But should you pile into cybersecurity stocks now after a big spike in them? Probably not, if you didn't own them already. If you do own them, great. If not, just a moderate position of cybersecurity stocks is plenty. And the point I'm getting at is it's almost always a mistake to make big wholesale changes to your portfolio based on macroeconomics or geopolitical events, because no one really knows how this is going to play out. And you can look back, however, and see that every time there's a crisis, war in the Middle East after Saddam Hussein invaded Kuwait, or 9/11, if there's ever a bolt out of the blue, that was it, or the global pandemic was something that people weren't expecting. But every time we've seen that calmer nerves eventually prevailed. And so I want to encourage people to stick with the program, not make huge changes. Sure, there's plenty of opportunities developing in these volatile markets, and you should work to take advantage of them. But the idea of going totally to cash or getting completely into gold or oil or defense just doesn't make a whole lot of sense. And it's likely to be the kind of thing that people regret a few weeks down the road. So I want to encourage you to stay the course, to have a plan and stick with it, which means to asset allocate your portfolio so you have investments outside the stock market as well as inside it, to diversify your stock holdings so you have stocks in every industry, including energy and defense and cybersecurity. A diversified portfolio of common stocks always, over time, outperforms everything else: cash, bonds, gold, real estate, commodities. That's what I suggest that you continue to do. That's it for today. As always, feel free to subscribe to the channel by clicking on the link below. That's all for now, and I look forward to speaking to you again soon.